Okay, let's dive right into this highly anticipated IPO prospectus. Today, we're doing an explainer on SpaceX, but we're looking at it strictly from an investor's perspective. We're looking past the spectacular rockets and those sci-fi ambitions to evaluate the actual business model driving the whole operation. We're going to break down their S-1 filing to really understand how they're monetizing space, connectivity, and now artificial intelligence. Together, we'll extract the exact data and structural insights you need to evaluate what is arguably the most ambitious infrastructure company in history.
So the crucial starting point here is the sheer scale of the total addressable market, or TAM. SpaceX estimates this at a staggering $28.5 trillion. To put that massive number into perspective for a second, that is literally larger than the entire GDP of the United States. When you're analyzing this investment, you really have to understand that they aren't just looking to capture existing market share, right? They're aiming to create entirely new trillion-dollar economies.
And this connects right back to their founder. Elon Musk states, "You want to wake up in the morning and think the future is going to be great, and that's what being a spacefaring civilization is all about." Now, as an investor, you're buying into a thesis that views humanity's expansion beyond Earth not just as some exploratory dream, but as a real commercial necessity. This core philosophy is exactly what dictates their extreme capital allocation and long-term strategic planning.
To truly grasp this complex capital experiment, we're going to break things down into 5 areas. First, the SpaceX investment opportunity. Second, their $3 trillion pillars. Third, financials covering revenue and growth. Fourth, the ultimate competitive moat. And finally, risks and shareholder control.
Okay, starting right off with Section 1, the SpaceX investment opportunity.
Now, while SpaceX is famous for its rockets, look at this. A massive $26.5 trillion of their future market value actually lies in artificial intelligence. The space segment, which includes all the launch vehicles, is estimated at $370 billion. Connectivity, which is powered by Starlink, sits at $1.6 trillion. But AI represents the overwhelming majority of their addressable market. This completely reframes how we have to value the company. It's an AI infrastructure giant utilizing space logistics, not just a rocket manufacturer.
Let's move into Section 2, $3 trillion pillars.
First up, the space segment. This is their logistical foundation. Right now, SpaceX is launching over 80% of the world's mass to orbit. Historically, accessing space costs roughly $18,500 per kilogram, but SpaceX's reusable Falcon 9 dropped that down to around $2,700. And with the upcoming fully reusable Starship, they aim to reduce costs by another 99%. This fundamental reduction in the cost of accessing space is what makes everything else the company does economically viable.
Building on those cheap, frequent launches, we have the connectivity segment, which operates the Starlink network. With roughly 9,600 low Earth orbit satellites, this is the largest low-latency satellite network in existence, and they currently boast 10.3 million subscribers globally. For an investor, this is huge. It highlights a massive diversification in revenue. They're shifting from purely B2B rocket launches to a massive B2C and B2B telecom base. They're effectively turning space access into a global digital utility, bypassing traditional terrestrial telecom networks entirely from orbit.
Finally, we have the newly acquired AI segment. Merged into the company via xAI in early 2026, this unit features their cutting-edge Grok AI model and utilizes massive gigawatt-scale terrestrial computing infrastructure like the Colossus data center. And it's uniquely powered by a literal fire hose of real-time data from the X platform, which has over 550 million monthly active users. But, as we're going to see in a bit, their ultimate goal is to push this computational infrastructure off-planet.
All right, moving right along to Section 3, financials, revenue, and growth. Let's look at the actual financial reality of this vertically integrated model. If you look closely at the connectivity row for the full year 2025, you'll see it generated over $11.3 billion in revenue. It's an absolute cash cow, delivering over $7.1 billion in adjusted EBITDA. Meanwhile, the AI segment and next-generation space R&D are currently burning some very heavy capital. Basically, the connectivity profits are actively funding the future. For example, in 2025 alone, the space segment funded over $3 billion in R&D specifically for the Starship program.
In fact, capital expenditures for the AI segment alone reached an absolutely mind-blowing $12.7 billion in 2025. That underscores the staggering, highly capital-intensive investment required to build out gigawatt-scale data center infrastructure. However, there is immediate enterprise demand for this compute power. The S1 reveals they actually just signed a $1.25 billion per month cloud services agreement with Anthropic to lease capacity at their Colossus facilities, so that shows you exactly how quickly they're monetizing this massive infrastructure spend.
Which brings us to Section 4, the ultimate competitive moat. So, you might be wondering, how does SpaceX actually justify this intense capital burn? Well, they rely on our proprietary engineering framework known simply as the algorithm. It's an iterative, 5-step process. First, make the requirements less dumb. Second, delete unnecessary parts or processes. Third, optimize what remains. Fourth, accelerate the cycle times. And fifth, only automate proven processes. This relentless first principles approach drives unprecedented speed and cost efficiency. It's exactly how they brought their first Colossus AI data center cluster online in just 122 days, compared to an industry standard of about 2 years.
And this engineering moat allows SpaceX to pursue something truly revolutionary: orbital AI compute. Right now, terrestrial AI compute is heavily constrained by aging power grids and massive electricity demands. SpaceX plans to bypass Earth's energy bottlenecks entirely by moving data centers into space. Up there, solar energy is limitless and near constant, and the vacuum of space provides natural radiative cooling. By leveraging their cheap rockets to launch their own AI chips, they genuinely believe they can fundamentally lower the cost of AI computation far beyond what's even possible down here on Earth.
Okay, let's sober things up in Section 5, Risks and Shareholder Control. The prospectus impartially outlines several massive risks that you, as a potential investor, absolutely must consider. First, the absolute necessity of Starship succeeding. If Starship can't achieve rapid, full reusability, their plans to deploy heavy next-generation satellites and massive orbital AI data centers, they'll just stall. Second, there's that intense capital burn required for terrestrial AI infrastructure we talked about, which could definitely outpace their cash flow. And what about the legal side? They face severe regulatory hurdles, from environmental reviews of launch sites to acquiring super-complex spectrum licensing for global telecommunications. Finally, much of that multi-trillion-dollar TAM relies on entirely unproven markets, like orbital compute and lunar industrialization.
Investors also need to be fully aware of the governance structure here. SpaceX will be a controlled company. Elon Musk will hold Class B shares that carry 10 votes per share, giving him an overwhelming majority of the voting power. This grants him absolute authority over board elections and corporate direction. Essentially, if you buy Class A shares in this IPO, you are fully trusting the founder's vision and execution capabilities, because you will have virtually no ability to influence corporate matters or strategic decisions.
Based on everything in this S1, I want to leave you with this final thought. You have to weigh the unprecedented engineering and financial risks against the incredible potential of an age of technological abundance. Are they building the necessary infrastructure of the future, or is this simply the most complex, high-stakes capital experiment in history? Thanks for joining me for this explainer, and as always, keep questioning the future.